Yes, sir. I am going to walk through the presentation we gave at the Coffee with Council this past Saturday. Hopefully everyone in this room is aware we have a 0.25% income tax levy on the ballot November 6th. It will be issue 11. Here at the end of this, we will show the ballot language. So anybody with absentee ballots at home know what to look for. So this first slide, basic overview. Most of you saw this in your utility bill. I'll expand on this a little bit, but the basics here were included in your last water bill. So issue 11, it's a 0.25% income tax levy. If passed, it'll increase the income tax rate in Germantown from 1.25% to 1.5%. We have been at 1.25% since 1988. We're currently one of the lowest in the entire Miami Valley, which you will also see here shortly. So how does this impact me? If you currently work, your taxes will slightly increase. I have a couple examples we'll walk through later in this presentation. If you do not work, this will not impact you. If you have no income, this will not impact you. The hope is, if this passes, it will in fact eliminate the need for several future property tax levies. The key here, this is a income tax levy, has zero impact on your property taxes. Why is the city looking for additional revenue? So as I said, the rate has not increased since 1988. That alone is not a reason to seek additional revenue. Our infrastructure is failing. Road, water, sewer infrastructure, it's currently beyond its effective lifespan. We have multiple streets, which all of our residents know, require significant repair or reconstruction. The road levy that we currently have with the township was not designed for large capital projects like we just did on Cherry Street. The only way we were able to accomplish the Cherry Street project was thanks to that zero interest loan that we received from the state. The joint levy we've got with the township actually was intended for road maintenance, and it doesn't even fund road maintenance as we should be accomplishing road maintenance. So at the moment we're deferring essential maintenance. Eventually this is going to increase the cost that it takes to fix those roads. Our engineers identified well over $5 million in needed infrastructure improvements in Germantown alone. This levy will generate roughly $340,000 per year. That's our internal estimates. And finally, and most importantly, we have absorbed $690,000 in state funding cuts since 2013. You can't take that kind of hit and not make up for it elsewhere. And so that's where this 0.25% is really coming in. We tried, for those of you that know the history of this, we've tried this property tax levy a couple of times as a road levy. We tried it continuous, we tried it not continuous, capped at 7 years. Really out of concern for those on a fixed income, we decided we're going to look towards income taxes for this additional revenue. So that's how we ended up here. If you pay income tax to another city, does Germantown provide a credit? And the short answer is yes. Last year, we initially voted to eliminate the income tax credit around this time last year. After hearing input from our residents, we recognized our mistake. We met with those opposing the elimination of the credit, and we worked out a compromise. So it was actually Mark Ratliff had started a petition to reinstate the credit. We've met with Mark. We talked through this plan, and at least at the time of talking with Mark, we know he fully supported this, and hopefully he's going to be coming out with something to that effect for those that signed that petition. Placing the credit back at 60% would really place an equal burden on those working in town and outside of town. A lot of the input we received was all about equity. People wanted the same impact on those in town that work in town as those that work out of town. So reinstating the credit back at 60% allows us to do that. Had we put it back at 75%, you would not see the same equal burden on both groups that we see now. So the answer, yes, we have a credit. It is at 60% at the moment. Walk through a couple examples here. So the first example, a resident that is retired or not working. I said at the beginning, this is an income tax levy. You have to have an income in order to be affected. You will not see an impact, $0. Nothing will change other than if this passes, we'll be asking for fewer property tax levies in the future. We will not have a need, or especially that road levy that we've run several times. Second example, If you work in Germantown or a Germantown resident that works in a non-taxing entity, such as a township, non-taxing municipality, such as Beaver Creek, work at the base, there is no income tax owed to that local taxing entity. Your income tax rate will increase 0.25%. So these numbers that you're looking at on the screen here, the median income in Germantown is around 57. We just rounded to 60. The first line, 2018, that's this year. Current income tax rate 1.25%. Take that times the salary, you owe roughly $750 this year. If this passes and it increases to 1.5%, you will owe $900 next year. Net impact is roughly $150. And the key here, if you don't pay income tax where you work, you pay everything to the city of Germantown. And the last example, and this probably applies to most people, if you pay income tax where you currently work, they get a vast majority of your taxes. For a current Germantown resident working in another entity, I use Miamisburg in this example, but it would be the same for Dayton or Oakwood or Kettering or Centerville, Springboro. In 2018, assuming a 1.25% income tax in town here, you would claim a 60% credit, which would reduce your tax burden by $450. So you take the $750 that you saw from the previous slide, minus $450, your tax burden is $300 to the city of Germantown. Effective tax rate is 0.5%. 2019, if it goes up to 1.5%, you will claim 60% credit. That'll reduce your burden by $540. You will owe $360, so an effective tax rate of 0.6%. The net impact between 2018 and 2019 is $60. The key point here, going back a slide, for those working in town, they owed $150. Those working out of town would owe $60. That doesn't look equal. The key here, if I had added another line and you look at 2017, when the credit was 75%, that person would have owed around $173. So from 17 to 19, the net effect actually is around $173. And compared to the 150, that's where we're saying it's roughly equal, whether you work inside or outside of the city. So to talk a little bit about value, every one of us here lives here. We all pay taxes here. We don't have any interest in spending your tax money frivolously. So I think it's important to look at what kind of value you're getting for living in Germantown. So this first chart shows taxes collected per capita in several cities in the Miami Valley. We've included here the area cities that had their budget posted online that included their income tax revenue. So per resident, Germantown collects the lowest amount of income tax of the listed cities. Germantown is there on the very left, the green column, followed by West Carrollton, Brookville, Centerville, all the way up to Oakwood and Moraine is actually the highest collected per capita. You don't expect Moraine to be at the top, but when you look at their employers, they've got several large companies in the city. Combine that with a population roughly the size of ours, that's how they get that high value. And then Oakwood, obviously, for the most part, is just the income of the residents is so high. So if you have an enormous business presence or you've got a large population of high income earners, you're going to see significant tax revenue, which would make one believe that us being on the opposite end of the spectrum here, to make up for that, we would need to have high taxes. We don't. We actually have some of the lowest taxes in the entire area, and so we'll follow with that. So your property tax rates in Germantown, and this was from a Dayton Daily News article probably 2 years ago. They compared property tax rates as a percentage of your home value. Germantown, again, is green. We are there on the left. The only one below us is Carlisle. I believe the Dayton Daily News article was only looking at Montgomery County, so that is the portion of Carlisle that's in Montgomery County, which is probably a handful of houses. So next to that is Germantown, followed by German Township, all the way up to the other end. I think we've got Oakwood and Union. So once again, property taxes are extremely affordable here. And finally, income tax rates. We are currently second lowest. Again, this is Dayton Daily News evaluation of income tax rates in Montgomery County. Farmersville, Lebanon, and Union are all at 1% there, followed by Germantown at 1.25%. followed by Springboro, Fairborn, and Clayton at 1.5. We would join that 1.5 group, assuming this passes. We'd still be second lowest in the area. And we don't have this on the chart here. You can go out online and find this. The City of Oakwood does a utility rate study every year, and we are consistently in the bottom 50%. I want to say there's around 80 cities on this study, and we're in that bottom 50% for the entire southwest corner of our state for sewer and water rates. So projects that'll be completed as a result of this levy. So our city engineer did a evaluation in 2018. The original, I think, was in 2015. And they go street by street throughout the city. They look at the condition of all the streets, and they look at what phasing of street projects, which ones need it, which ones need reconstructed more critically than the others. So if you have a chance to look at this map, you'll see green streets are currently maintainable. There's a list. There's a whole host of green streets. That doesn't mean they're being properly maintained today, but that means in their current state, with appropriate funding, we could continue to maintain them without any significant cost, without having to reconstruct them or anything else. We do not have that funding today. The funding is not in place to appropriately maintain all of our roads. So you may look at that and think, there's a lot of green streets on there. We are not maintaining them the way we should because we don't have the budget to maintain them the way we should. Then they jump down to roads, orange streets that require partial reconstruction. It's not a full depth reconstruction like we did on Cherry Street, but something more like North Hillcrest, or a lot of the streets up in Hillcrest where they're concrete streets. It takes almost our entire budget to do just the repairs to those concrete streets. It's very expensive to fix, and takes a lot of time, takes our entire budget for the year. And then finally, they've highlighted blue streets on this map, require total reconstruction or widening with added curbs. Some of the streets, like you'll notice Route 4 on there, they've got listed in blue, doesn't necessarily need widening. It does not have curbs. And so eventually you could get to the point where maybe it needs curbs, but with this funding, we are not looking at widening and adding curbs to Route 4. We're looking at the streets downtown, the streets up in Hillcrest, Round Heights, everywhere else. Route 4 is also one of only 4 streets in town that would qualify for some additional zero interest loans from the state. Those are highlighted with kind of a pink outline on the map. When you look at it, I believe it's West Market Street, Farmersville Pike, Route 4, and possibly Dayton Pike. Maybe the only 4. But aside from that, other streets that are listed for total reconstruction, you've got a whole list of them. Butter, Water, Part of Center, Mulberry, Jefferson, Main, Plum, Perry, Indris. You recall a few years ago, we didn't reconstruct Main Street. We were hoping to, had a street levy pass. We did a Band-Aid approach. We did a Cape Seal down on Main, Plum, and Perry, just to have a Band-Aid fix. It's going to fail in the next probably 5 to 10 years because there's not an appropriate base underneath the asphalt. When we did core drilling, there is dirt underneath Main Street, and that is it. When you look at Cherry Street, they build up, 3 feet of gravel so that you've got appropriate drainage. You do not have that on Main Street or most of these other streets because none of them have actually been constructed using modern technology. Some of them we can limp by with just basic fixes. Others need total reconstruction. As far as maintenance goes, you look at East Market Street up in Hillcrest. A couple years ago, we spent $700,000 to redo that road correctly. Today, there are cracks in that road. They need crack sealed, or it's eventually going to turn into potholes. Dayton Pike, when I first got on council, Dayton Pike was one of the worst, had gone from one of the worst roads in town to probably the best road in town. That was almost 10 years ago. It's got cracks across it. We need to start sealing those roads that we've paid a significant amount of money to construct and construct correctly. We do not have the budget to do that maintenance. Even streets in good condition, if you look at West Market, or Market really all the way through town, it's starting to get cracks. We need to be crack sealing and doing maintenance on those. Aside from streets, and I talk streets for the most part because that's obviously going to be the biggest focus of this revenue. We have sidewalk infill. We've done really only one project. That was grant from the RTA to infill East Market Street there, really from the bridge all the way out to Route 4. If there are critical areas such as that where we've got kids riding their bikes on the busiest road in town, we're going to be looking to do some of that infilling. And we're also going to continue looking at grants to be able to fund it with outside money. Other downtown enhancements, park improvements, basic things. The majority of this is going towards streets. I would say 90% plus of this is going to end up towards streets. Kind of the last chart here, other than the ballot language, this is just a hypothetical split of taxes based on that same $60,000 salary. So when you look at this, a large majority of what you pay goes everywhere else other than here. So it goes to the federal government, goes to the state government. Local government's getting $900 there. Those taxes are very rarely, if ever, invested here. The state may give us loans like they did on Cherry Street. It's a no-interest loan. It's appreciated. But if every one of our residents is paying this kind of split out, we're not seeing that kind of return to this city like you would if you pay a local income tax. So this 0.25% increase, every dime of that is going to stay here and is going to be reinvested in your own town. Now, you also don't get to vote on your state and federal taxes like you do on your local taxes. So it's a sacrifice that I think we're all asking everyone to make, to vote yes for this, because every dollar of this is going to stay here in this town. These guys have all heard me make this speech that there's a lack of faith in government today, mostly at the federal level, probably somewhat at the state level, and hopefully less at the local level. But what I ask people is, don't let that lack of faith from the federal level trickle down to the local level. If you have a problem, you have an issue, you know every one of our addresses. You've got all of our phone numbers. You've got the city manager you can call. You got the mayor you can call. I prefer you call. But don't let that lack of faith in the federal or state government jade you towards local government, because every dollar is going to get spent here. And if you don't like the way it's going to be spent, you can either run against us or you can call us and complain about it, and we'll do something about it. So bottom line, ballot language. Anybody with a absentee ballot at home today, this is what you're going to see. This is what you're going to see when you go to the ballot box on November 6th. It's a 0.25% levy increase on income tax for streets, sidewalks, parks, and other general capital maintenance and operating expenses by the city for a continuing period of time. So bottom line, income tax isn't keeping pace with the cost of goods and services. This group made a difficult choice to put this on the ballot. This was not an easy thing to do. It probably should have been done a lot sooner. It's been almost 30 years. It probably should have been done a lot sooner. It's a tax increase for almost every one of us as well. Yet we're still all voting for it. We could have thrown up our hands, given up, not even tried, and walked away. But as soon as you start losing businesses, people are going to start noticing a real difference in town. As soon as you start cutting basic services everybody's used to, people are going to start noticing. So you've got to somehow find that balance where we can raise revenue, evaluate the budget, reduce unnecessary spending, still making this town something you can be proud of when you come home from work. I run into people all the time, and I did again the other day with somebody that was out at the Pretzel Festival. Made their first trip to Germantown. They love it. They love the history, the buildings, the packed downtown storefronts, which has not always been there. But if you go downtown, there are very few vacant storefronts in this town. They can't believe we've got a movie theater, jewelry store, kids clothing store, hardware store, art studio, independent bank, pharmacy, and library. Amazing pool, Florentine, on and on and on. There's not many places like this. We're privileged to live here, and we want to keep it that way. So I don't know if Tom's going to like me saying this, but I'm asking you to vote yes for issue 11, November 6th, to help us keep our town the way we like it. Thank you.